Hello traders and welcome to another video review. Today is Friday, February 14th, 2025. Let's take a look. What do we have in the economic calendar for today? So only medium important and high important events are on my calendar. You can see that the Asian session was non-event session. Early in the London session we got the PPI from the Switzerland in line with the expectations, 0.1. Then we have Spanish CPI 2.9%, just slightly below the expectations. We are still waiting for the Polish CPI and we are still waiting for the Eurozone GDP, which is scheduled for release at 11 o'clock. The market participants expect the GDP to stay at the level of 0.9%, and on a yearly matter that's decrease from 0.4 to 0%. Not that good whatsoever. Interest rate decision in Russian Federation today at 11:30. Actual rate is now 21%. Then we have the core retail sales and retail sales data, which are the most important data releases for today. Of course, these data are from the US. We can have the core retail sales, import price index, export price index, all of this. The whole bunch is scheduled for release at 2:30. Then we got the manufacturing sales and wholesale sales from Canada at the same time. And we have the industrial production from the US at 3:15. Then we have the business inventories at 4 o'clock. Then we have the CPI from Russian Federation at 5 o'clock, and then we are narrowing towards the end of the day. At 7 o'clock, Atlanta Fed GDP now, and at the same time, US Baker Hughes oil rig count and total rig count will be released. So, London session is almost non-event. So please don't expect very big volatility during the London session, and the US session might be quite interesting today, which is why we start with the euro-dollar, our technical part of this review. So the euro-dollar is breaking higher. Euro-dollar is breaking higher above the level of 1.0468. So the upper supply level has been violated. So now the local high is 1.0479. What do we do then is that's not something I wanted to do. There you go. What I want you to see now is that this zone here, okay, this zone here will be removed higher, because there is a swing high at the level of 1.0534. So now we are going to move this level a little bit higher, and we will switch this lines here. There you go. This will be a very narrow, very tight zone here. Let me just move my rectangle. Okay, so that will be a very tight zone, and this zone will go from here, let's say, to here. And that's the new supply zone, all right? So please stay focused. The market is moving higher on very strong momentum, 64 points. There is still room to the upside. There is still room to the upside as well. It looks like the market wants to do this this movement to the upside. Now we are going to get rid of a few of these lines here, because the market doesn't actually react on this line, so they are completely useless from our point of view. This one will stay and will be technical support, 1.0437. 1.0461 is the support, and 1.0479 is support as well. So that's the current situation here. We have a breakout, of course, above the orange trend line. Now what we are going to do is we are going to move this line a little bit lower. Okay, so this is what we are going to do. We are going to apply this line here. So we still have it on the chart, so that's not a problem. And you can see that this line might be applied here. Let's see if we have the channel, shall we? Shall we see if we have the channel? Something like this doesn't actually looks bad. So that's the channel. What else can we spot on this chart? I think that you know what I mean. Straight on. What do we see here? Is this, and see to the upside, right? So that's our plan for the euro dollar. We can of course see the projections of the Fibonacci projection. So 1-to-1 is just below the supply zone 1.0515. So that might be the target, and 161 is way above 1.0657. So ABC to the upside, quite possible. Then we will see what will be the market reaction on the swing high. Let's take a look at the S&P 500. Let's take a look at the daily time frame chart of the S&P 500. The reason is very simple. Let me just zoom in and move it here. Let me just zoom in. There you go. As you can see, the market is using the 100 period moving average to move higher, and it's using it as the, of course, technical support. So what we are going to do is we are going to apply some lines here. So we got the technical support at 5,695. Then we got the technical support at the recent swing low 5,769. There is one more technical support at this level, and there is one more technical support, as you possibly notice here. So quite strong layer of the technical supports. Now the market wants to move higher, which is not a problem. However, we can apply the trend line here, something like this, almost ideal trend line. We applied to this, almost this, right? Swing high. So it looks like this is very nice, a very nice trend line, and we are about to break above this trend line to test the level of 6,049. Then eventually go to 6,089. So the outlook for the S&P 500 looks quite bullish right now. And because we talk about the US dollar very often, let's take a look at the US dollar index. And let's take a look at the US dollar index, of course, on the 4-hour time frame, because it looks like we got our trend line here. And this trend line, the black one, was violated to the downside. We are now testing, let me just mark this level here. We are now testing the lows of 106.94. So that used to be a technical support for the price, for the market. The market just reversed, just broke below this level. And to be honest with you, if we just zoom out to see the greater perspective, let me just do it like that. You can see straight on that it doesn't actually look very good. Now, if we use this low here and apply trend line with this level here, okay, let me just get rid of the magnet. There you go. Look at this. Yeah, it's almost the same line, so we can get rid of the black one, right? And we got the blue line here. There is first support, second support, third support, pullback, breakout. So very important trend line here on the 4-hour time frame chart of the US dollar index has been violated, and it looks like the market wants to go lower, way lower than it is right now. The next technical support below 106.99 is right now. Well, it's hard to say because there is nothing here. Maybe, just maybe, this one might work, 106.71. But otherwise, if we break below this the technical support, there is almost nothing. Back down towards the December 6th low at 105.42. So please be focused with the US dollar index. And last but not least, as usual, we talk about the Bitcoin, but this time let's talk about the Ethereum and what is going on here. So this is the, let me just switch to daily. Let's see how that works. There you go. So on the daily time frame chart of the Ethereum, you can clearly see that there is a very well established the level of interest here on the Ethereum. This is 2111. This is this level here, 2149, and there is the recent swing low made here, 2190. So there is a very thick demand zone that usually is working very well for the bulls, and then this one, and then we go up, right, even towards the extremely oversold conditions, right? So that's the first thing. We got the demand zone. Now trend line from the highs of 4,106 from the December 16, you can clearly see that we got this downside movement here, which is just a simple trend line. First touch, second touch, third touch, fourth touch, false breakout, reversal. So this is a very important trend line, and currently the market is still under the bearish pressure. Momentum is negative, it's only 41 points. So if we now zoom in, we can clearly see that our situation on the daily time frame chart doesn't actually looks very good for the bulls, because immediately from the upside we got this low here, which is the technical resistance, and we got one more level, obviously can be connected here or even here, 3015, which is the technical resistance as well. So the price, even if it will go higher, then there is a trend line resistance, horizontal resistance, and then eventually, even after the breakout, there is still 100 period moving average. So not good situation for the Ethereum. We should expect the Ethereum to stay under the bearish pressure, and after the breakout below 2,523, the lows of 2,161 are being expected. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.